Hello guys, welcome to my channel guys. It's been a while without releasing any video, any content guys. I apologies for that. Had some challenges, life challenges, but rest assured guys, I am back with hot content. So make sure that you subscribe to this channel so that you're gonna get all the content that I'm going to be giving out guys. So without any waste of time guys, today we're going to start with the bank reconciliation. We're going to start with bank record. Right. What is this bank reconciliation guys? And the main question is, why as an individual are we asked to do a bank reconciliation? Why? The question is why? Why do we have to do a bank reconciliation? So my answer will be simple and short. The reason why we prepare this, we prepare a bank record to reconcile a bank account with bank statement. All right, so this is the reason why we have to do a bank reconciliation statement guys. So why do we do this? Is because we want to make sure that the bank account, it is reconciling with the bank statement. Now one can ask, who prepares a bank account? Who prepares the bank account? The bank account guys is simple. It is prepared by us, a business. Bank account, we're going to start with the bank account guys. Bank account is prepared by the business or the company, right? So what do we record in the bank account? In the bank account guys, we are only tracking two things. We only record the inflow and outflow of cash. The inflow and outflow of cash. These are the two things that we record in the bank reconciliation guys. I mean in the bank account, right? Now we talked about the bank statement. What is a bank statement? A bank statement guys is the same thing that an individual can go and request from their respective banks. You go there, you ask for what we call a bank statement. And what do you see in the bank statement? Let me quickly remove this. What do you see in the bank statement? Right, in the bank statement, these are the things that you're going to see. In bank statement, you are going to see transactions. Now I'm just going to stop there and say transactions. With these transactions, we are going to see transactions that affect our bank statement negatively or positively. That's what we're going to see when we get that paper written, the bank statement. So we're going to see transactions that affect us negatively or positively. But in the bank statement, this is how this negative and positive works. All the negative transactions, you will realize that now these are debit in a column of what? Debit. And what are these positive? They are credit. They are credit. Right. When you get that paper, you know, okay, when I see the bank statement, when I see the debit, that means that is affecting the bank statement negatively, and the bank statement is affected positively only with what? With the credit. Right? Different from the bank account. Look at the bank account. The bank account, it only records the inflow and outflow. Now, who prepares this? It is us that prepares the bank account. So this inflow and outflow, these are our debits. They affect us positively. And the outflow, these are credits. They affect us negatively. It means now the money is going out. The money is going out in terms of what? In terms of cash payments. Remember, the bank is only tracking the flow of money, right? So when the money is affecting the bank, we have to know that that money is in a form of cash. We are not talking about the credits here. Are we clear? So, for example, I'm going to give you the example, 2 examples now. Now, let's say you are buying stock. There are 2 ways where one can buy the stock. One can buy the stock on credit, one can buy the stock on cash, right? So my question is, when is the bank affected? When is the bank affected? The bank, it is affected only when the stock is bought on cash. When you talk about the credit, just know that the bank is not affected anyhow. You understand? Because that money is not coming out of the bank, but we are buying the stock. We understand? So the bank is not affected in this case. So the bank is only affected when we used cash to buy the stock. Right there, guys. Right. So these are the 2 things that I wanted to show. Right? When you see the bank statement, on the bank statement, your debits are negative and your debits are negative and your credits are positive. But it is the different thing when you come to the bank, because this account is an asset account. This is an asset, guys. This is an asset. Remember, this is our money. This is our moolah. So, how do we draw an asset? We know that our debit are positive and our credits are negative. So in the bank, it is the opposite of the bank statement. Here, guys. All right. So now I want to move to the next step. Right? We are. When I said when we do the bank reconciliation, we want to reconcile the bank statement with the bank account. Are we clear, guys? So if you look at the balance, if we check the balance of the bank statement and the balance of the bank account, we see that those balances, they are the same. One can ask, is it necessary to do the bank reconciliation? And the answer will be simple: no. We don't do the bank reconciliation because these 2 accounts already, they reconcile. So we only do the bank reconciliation and the corrected bank account if these 2 balances are not the same. That is when now it is necessary for us to do the bank reconciliation and the corrected bank account. I will call it that way. Right. I want us to move forward, guys. Right. These are the things that we are going to encounter when we check when we do the bank reconciliation and the corrected bank account. Right. Now, first thing, we're going to be talking about the EFTs. EFTs. How should electronic, remember EFT, these are the electronics. Right, the electronics, guys, they can be recorded in what? In the CPJ and in the CRJ, depending on when are they affecting us. Okay, this can be a receipt and it can also be a payment. But now we have to be careful. When is it a payment and when is it a receipt? EFT, guys, it is a receipt when our data is paying us. So that is what is a receipt. He pays us in terms of what? Of the EFT. You know that now we have changed from the system of checks. We have moved now to the system of EFTs, right? Which is the electronic transfer, guys. So, like I said, then now when the EFT is it CPJ, now it is going to be a CPJ when we as a business we buy cash, but we are not paying with cash. You understand? At the tilde, what do? Remember, we are a business, so we buy stock in bulks. So what do? We just send those people money via EFT. So now we know that this is affecting our bank how? Negatively. And this is going to affect our bank positively, right? Now the second thing that I'm going to talk about is the direct deposit. Direct deposit, right? How do we treat this direct deposit? Let's say we have a tenant and that tenant is paying us. What will the tenant do? The tenant will directly deposit the amount in what? In our accounts. Or the tenant can also do what? The tenant can also have a choice here. Are you clear? The tenant can do the EFT, or the tenant can do a direct deposit. So in this case, it's going to be a receipt. It's not going to be a cash payment journal. So it's going to be, it can be a direct deposit, it can be a cash receipt. So we know that this direct deposit, how is it affecting us and where should we record it? We should record this in what? In a cash receipt journal. So how is it affecting us as a business? Negative or positive? It affects us positively, guys. Right, moving to the next one. Right, we're going to talk about the outstanding EFTs. Outstanding EFTs. Right, what do we do with this and what are these? Let me go back. I want to go back to show you something. We said the reason why we do the bank reconciliation is because we want to reconcile these two. We want to reconcile the bank statement with the bank account. So once you come across the outstanding EFTs, it means these EFTs, they appeared in the journals. Remember, where will we see our journals? Our journals, we will see them here. CRJ and CPJ. This is where we are going to see our journals. So these outstanding EFTs, now it is when these accounts, the EFTs, they are only appearing in the journals, but they are not appearing in what? In the bank statement. That means the transaction might have happened while the bank statement was issued from the bank, but in the bank account they are already recorded. So that is where now we're going to see the outstanding EFTs. So how should they be recorded? They should be recorded in what? In the bank reconciliation. they should be recorded in the bank reconciliation statement, right? So now one now can ask, what is the bank reconciliation? The bank reconciliation, again, yes, this is the corrected bank statement. I'll put it in that way. Corrected bank statement. When we correct our bank statement, we correct our bank statement by doing a bank reconciliation. Right, let's move forward. Now we move to fees. Let me just write fees here. Let me use the right one. Fees. Guys, with the fees, you will never see the fees appearing in our journals. When I'm talking about the journals, I'm talking about CRJ and CPJ. You will never see these fees in these two accounts. Where are they coming from? They are coming from our bank statement. So what do we expect to do? Now we have to take the fees and record them again in what? In the bank account. We record them in what? In the bank account. So these fees, remember, we have a lot of different fees. We have withdrawal fees, we have the service fees, we have a lot of fees. So what do? We combine them and then we call them what? We call them bank charges. We call them bank charges. So this is when now the question is, since they are appearing in the bank statement, is it necessary to show them again? No, they are already there. The balance that we're going to see of the bank statement, already the fee are included. So where should we record them? We are now going to record the fees in what? In the bank account with the name of bank charges. Correct. We move to the next one. Right, we have the interest on the overdraft. Again, the interest on the overdraft will not appear on the bank account. It will always appear in the bank statement. My tablet is interest on overdraft. What is the interest on overdraft? Remember, the word overdraft, it simply means a negative bank balance. So these are the interests that you were charged on the unfavorable bank balance. Understand, guys? So where will we see this? They will always come from the bank statement. Then what do? We will only correct them by taking them into a bank account. Simple as that. I'm skipping it. Right. We have debit orders. The debit orders, we know that those are the permission granted by you as a business. You grant your service providers like insurance, you understand, the car payment, that each and every month deduct this amount from my bank in order to settle my payments. Guys, I think it's clear enough, right? So the debit orders, once you see the debit order, it means you must see a debit order on what? You must see a debit order on the bank statement. So what do you do? If that the same debit order, it is not appearing in your bank account, what you do? You reconcile. You check where it was not recorded. So I want to leave this one here. Okay, let me remove here. I want to do something so that it will be understandable. Right, we every time want to make we want to make things to look alike. We want, which two things do we want to make them alike? We want the bank account. Remember, we are the ones that are preparing the bank account. We want our bank account to look the same as what? As the bank statement. Right, so this bank statement, when we reconcile, it is no longer called a bank statement. It is now called bank reconciliation. Let me just write recon statement. Right, we want these two to look alike. Right, for example, let me do this. We're going to do it in a 2-column method. This is the debit, this is the credit. Right, remember, the debit in the bank account is positive, then the credit in a bank account is negative. Right, but when you go to the bank statement, it's different. It's totally opposite, nothing else. It's totally opposite. So what does the debit shows in a bank statement? The debit shows a negative, then the credit shows a positive. Right, let me show you an example. Here is an EFT. We as a business, we are making a payment, so it's going to be what? EFT, right? The account affected here is going to be EFT, right? So how does it affect us? Because we are the ones making a payment. Is it positive or negative? It's going to be a negative because the money is flowing out. So if we make a payment of 5,000, where should this happen? Remember, we are using what? Our bank, you understand? So when our respective bank, let's say we are using FNB or Capitec, so immediately this transaction, it is recorded, it is traced by this account, the bank statement. Okay guys, so what must happen? Let me remove this so that I will show you something. It might seem a little bit confusing. So the same 5,000 that we have recorded in terms of what? EFT payments, what is going to happen to our bank? Our bank will now as well record this EFT. Now it will record. Who are we paying? We are paying Thomas. You understand? Now in the description we're going to see Thomas, but this is, we know that this is an EFT payment. Are we clear? This is an EFT payment. So where should the bank record this 5,000? Is it going to be negative, which is a debit, or a positive? Remember, the negative or the positive, this side, when you look at this positive, they mean one thing. This negative, it means the same thing as this one. They are all referring to inflow and outflow. So when we track this 5,000, it must appear in the bank statement as an EFT in the debit side as 5,000. Is there a need to prepare the bank reconciliation? No. There is no need to prepare a bank reconciliation. Right, but here there is a direct deposit now. It's a direct deposit. There's a direct deposit in in the bank account, the direct deposit of 10,000. How is it affecting us? It is affecting us positive because this is an inflow of cash. Right. What do we expect to see in the bank statement? We expect to see a credit of 10,000, but surprisingly, this 10,000 is not there. The 10,000 which was supposed to be there, it is not there. And our books now closes. Our books closes now. These are the only two transactions that happened. So how much is our bank balance? According to our books, our bank balance now is going to be a favorable, which is going to be on the credit, which is going to be 5,000. Right? So our books will say we have 5,000 in the bank. But what will this say? It will also say we are having 5. Remember, I didn't show the opening balances at the beginning of this month. So that is why now these things are going to look alike. But okay, here it is. Look at this. Our balance here, it is going to be it's also favorable of 5,000. But here's the question: where is this 10,000? The 10,000 is not appearing in the bank statement. So that is why now we are requested to do a bank reconciliation statement to reconcile these 10,000, to show that this 10,000, it was only recorded in the journals, but it was not recorded in the bank statement. Right. So let's move on to a practical example right now. Alright guys, now I'm taking you to an example of what is it that I mean about the bank account and the bank reconciliation statement. So let's tune in. Right, here is the question. They say the information below refers to West Hard stores, right? So your favorite thing, it should be about what is it that they say you prepare first before you go anywhere else in the information, right? So the first question here says you prepare the updated bank account in the general ledger. What does it mean? The moment they are telling you to prepare the bank account, it means the bank account was not reconciling with the bank statement. Therefore, if they say prepare the bank account, that means they must ask you the same question about preparing the bank reconciliation. That means the bank account was not reconciling with the bank account. So how will we do that? Let's check the information. They say the bank statement dated 25 reflected a favorable balance. Is this affecting the bank account? No, because this is talking about the bank statement which is coming from the bank. So here, this bank account, it is prepared by us, and then this is prepared by our bank, right? Okay, let's move on. The ledger account below, this is a ledger account. The bank cannot prepare the ledger account. This is only prepared by us, the business, right? So what are we going to do now? We're just going to throw our bank account, the bank account, right? Let's remember that the bank account is only having a debit and a credit, right? So we want to check the balance. Remember, we cannot always be, it's either we're running the positive or the negative balance. So let's check our balance. How was our balance? Was it positive or negative, right? So where will we get that? Let's read the information. Now they are telling us that the balance here, Okay, they are telling us that the balance brought down here, the balance brought down, we'll look at it here. Here is the balance brought down. Because why? When we check this balance, it was at the beginning of March. And which books are we preparing? We are looking at the books of the end of March, right? So at the beginning of March, the balance was 12,000, right? So our balance brought down is 12,000. Now let me tell you something. How can the balance be affected? The balance can only be affected when we look at this. They say the bank statement. That means this information reflected in the bank statement. That means we're expecting that this information was not reflected in the journals. That is why they said, the bank statement revealed the following, which did not appear in the books of the wife's heart. Which books? The journal books. Are we clear? So, how can this balance be affected by such information? It cannot be affected. So, the balance can only be affected when they say the balance is overcast or undercasted. We recorded less balance instead of a more balance, or we recorded more balance. That is the only way the opening balance can be affected. But in this case, the opening balance is not affected. So now let's dig in. When you look here, we have in the sundry account. You see, that means already they have calculated. But after calculating, they did not consider these things because they were only appearing in the bank statements, right? So what are we going to do? Now we're going to check how is the sundry account of the receipt affected. I will say, so how much was it? It was 89,226. Yo, my pen. Right, it was 89,226, right? So what happened? We're going to check the sundry account in the credit. You can see the sundry account. So how much was our sundry account? Our sundry account of payments, it was 88,000. 88,134, right? So now we check. Now what are we going to do? We're going to check if this transaction is affecting the sundry account of the receipt or the sundry account of the payments. Then we record it from there, right? When we check, they have the bank charges. Where should the bank charges go, guys? The bank charges, remember, now they are charging us. Remember the bank charges, if we go back, we said the bank charges, if I didn't remove that information, okay, I erased that information. Right, the bank charges, now they are talking about those service fees, withdrawal fees, you get me, guys? So how are they affecting the bank account? They are now affecting this as a payment. So we are going to increase this account with how much? With 315. So I just want my things to be big in to be visible enough. Right. Cash withdrawal by the debit card for wages. So how does it affect? It affects the sundry account in the credit side. So because the money is going out, the flow of money is out now, so we edit here with everything. Right, the next one, when you're done with this, you can tick, okay, I'm done with this one, I'm done with this one, now I'm coming here. Debit orders for insurance. Is that money coming to us? No, the money is going out. Therefore, we come and record this as a sundry account of payment. So how much is that? It is 992 rand. Right, we kind of scratch it like this, right? So we check, then we come to the next one: electronic payment made by customers. Our customers made electronic payments to us. So how should we record that? The flow of money, is it going out or is it coming in? Because we did not make the payment. It's not saying electronic payments made for customers. It says electronic payments made by so if our customers are making electronic payment, that means it is coming to us. As long as it is mentioned in our bank statement, that means it is coming to us. So the flow of money is coming in. The flow of money is in. So we come to this side, we add how much? We add 8,673. Right. So now when you're done, you see how that is my account. So what are we going to do now? We are going to add everything here, and we're also gonna come to this side and add. We add everything. So let me try up here to draw a nice bank account. So okay, our bank account with only the totals, right? With only the totals. So balance brought down is how much? Is 123,000. 120. No, it was 12,000. Yeah, 12,344. Right. Sundry account. Sundry account with only the totals. Then sundry account with the totals, right? So when we let me take my calculator and add this 89,000 226 plus 8,673, that gives us 97,899. Right, then we go to the sundry account in the payment side, which we add 88,134 plus 315 plus 4,129. So that gives us 872. So with that pattern, that means now we can balance our account. We can check which side is big. By observing, we can see that this side, the debit side, is bigger than the credit side. It's bigger than the credit side. So how much is it? It is, when we add 1, 2, is going to get 110,243. This 3 is giving me a problem. So even this side, that means it must be 110,243. All right. So now we are now left with the balance carried down. How should we do the balance carried down? Already we can see that this side is bigger than this side. So we want to check, okay, this side is bigger than this side with how much? Then we're going to get the difference between 110,243 with 93,000. Now if I punch that on my calculator, it's going to be 110,243 minus 93,872, which gives me 16,371. So that means our bank account says we are having a favorable balance of 16,000. When you go to the next month books, this is going to be our opening balance of 371. So this is going to be our opening balance next month, meaning this is our favorable balance. So this is how this information can be turned into a bank account. Right, now let's look at the next one. The next thing here to do is the bank reconciliation. Right, I'm going to remove all of this information now so that we can allow space for bank reconciliation, because we are done with the bank account. Right, so we'll move on to the next question. I want us to work on this whereby we can see the question so that you see exactly what I'm talking about. Moving from one page to another is not going to work well for us. Right, okay, now we move to the next one, which is the second question. They say prepare a bank reconciliation. As I said before, if they say prepare the bank reconciliation, it means our bank statement was not reconciling with our bank account. So how do we do this now? Okay, let me start here. I'm just going to write bank recon statement. Bank recon statement. Right, remember, debit and credit. But in this situation, our credit is a positive and our debit is a negative. It shows the outflow of cash, but the two, remember, they have to be the same. Right, now let's check. The first, it is to get the balance which our bank statement have calculated. Then we have to correct that balance to see which was not added on top of this amount, which was added more on top of this account. That is where we must start. So looking at this information, they said the bank statement, this information right here, they said the bank statement dated 25 of March reflect. That means we only got our bank statement not on the 30th, but we got it on what? On the 25th of March. And when they say prepare here, you see that they say prepare for the whole month, but the bank statement came to us on the 25th of March with how much? The balance as per balance as per bank statement. Balance as per bank statement, right? I'm just going to write statement. How much was that balance? The balance was, I show you I made a mistake here because I wrote in this column and it's going to sabotage everything now. Okay, balance as per, let me just do this, bank statement. balance as per bank statement, right? My tablet is not giving me the output I wanted, right? But it's fine, I'll keep on it. Okay, right, so how much was the bank balance? You see, I like this, they specified that the balance was favorable. If they say the balance was favorable, it means the balance was positive. And if the balance is positive in the bank statement, that means this is a credit. Okay, so how much is it? It's 15,431. 431, right? So we check this information here. They said already for them to calculate 15,000, this information was there, it was shown. So that means we already have worked with this information to calculate the correct bank. That means this one, it is only used for bank account. But look at the next information. The following did not appear on the bank statement. So this information here, only these 2 points, it is the information that we are going to use to prepare our bank reconciliation, because the information appeared in the journals but did not appear in the bank statement. So let's see. Deposit not appearing on the bank statement. Understand? So that means it appeared in which? It have appeared in the, this is a deposit, so this is a cash receipt, so it have appeared in the cash receipt journal, did not appear in the bank statement. So how is it affecting us? It is affecting us positively, right? So what do we say to this? We say this is an outstanding deposit. Outstanding deposit. How much is it? So our outstanding deposit, it was 4,454, right? Then we move on. We move on to the next one. We've dealt with this one. We move on to the next one. It's say EFTs made to creditors not appearing on the bank statement. We made the EFT to creditors. Creditors are people that we owe. So meaning that we were paying people that we owe, but that did not appear on the bank statement. That means it appeared in our cash payment journal. So this is what? This is an outstanding EFT. Are we clear? So is an EFT, for the fact that this is an EFT, which it is in form of a payment, it is affecting us negative. So this amount is a debit of how much? 3,540. Is there any information that you see on the screen that we did not record? If it's there that I cannot see, make sure that you comment, you show me that, and then we're going to deal with it later on. But let's leave that. Let's continue. Right, since now we have dealt with all the information, let's balance. We want to balance our account now. We want to balance our account. Same way that we did with the bank account, we check which side is big. Which side is big? Definitely the credit side is bigger than the debit side. So we add the bigger side. We say 15,431 plus 4,454. This is equals to, it gives me 19,885. 885. So we also get 19,885. Now someone can ask, why are we writing 19,000 both sides? It means these two accounts, when you add everything inside them, it's either debit or credit, we must get the same amount. Are we clear? So now, but this is not equal to this. The 3,000 is not equal to this. That means the difference is the amount that we must balance with, and it will tell us exactly how much is our balance. So what are we going to call that? It's going to be balance balance as per bank account. Why do we say bank account, not per bank statement? It is because this amount must be the same with the balance that we got in the bank account. If they can be the same, it means we are correct, because this is what we are reconciling. Remember, according to our bank account, it says our balance is 16,371. So let's do that and see if we're going to get the same amount. So we're going to say 19,885 minus 3,514. So how much is it? Now we are getting 16,371. Right. So here is our balance. So you can take the video back and check the balance according to the bank account. You will realize that this balance, it is the same as the balance that you saw on the bank account. Right. So this will be the end of our lesson, guys. Definitely I prepared much, but because of time I couldn't cover those questions that I prepared, but I think this will be enough for you guys. So I thank you for watching my video, guys. Make sure that you subscribe again, you like my videos, you share my videos, as you're not paying as well. So share with other learners so that they can see how things are done and how you can understand. So definitely, guys, on this channel I'm only going to show you more of my basics, guys, but you know what to do. The information is there. You want to get hold of me, you can get that information. I'm not limited to only online classes. I'm located around Gauteng. If you want one-on-one lesson, you can basically get my numbers, and then we can arrange on how we can meet and then how we can deal with these things. So get in touch with my contacts, but those contacts that you can see there, they are only for WhatsApp. So if you want to call me, you can call me via WhatsApp. I'm not sure if I'm going to pick up, so just make sure that you leave the message. I will reply to your message. I thank you guys for watching my video. Stay tuned for more videos. Subscribe to this channel. The next video that I'm going to upload is going to be about the debtors reconciliation and the creditors reconciliation and debtors age analysis. All about reconciliation. 3 consecutive days. Check my channels. It will be about reconciliation. And hit my comment, guys, if you want live sessions on YouTube. That's what we're going to do. If I can see many likes, I can see many comments, I will definitely hold a live lesson whereby I think we can do a question paper, or you request any topic about accounting, and then we'll hit on that topic, and then things run.